Hello. Today is Sunday, June 7th, 2026. Here is your daily signal. According to Bloomberg, gold prices have seen their most dramatic drop in 2 months as strong U.S. jobs data fuels bets on potential Federal Reserve rate hikes, causing ripple effects across bullion and bond markets. U.S. government jobs data and Federal Reserve monetary policy play a central role in driving financial market movements and mortgage rates, with employment reports, inflation trends, and recent fiscal legislation directly shaping expectations for interest rates and bond yields. The U.S. economy added 172,000 jobs in May 2026, nearly doubling the consensus expectation of 88,000, and Trump's tax and immigration megabill has prompted the U.S. Treasury to flood bond markets with new debt, pushing the 10-year Treasury yield higher and keeping average mortgage rates at 6.48% as of June 5, 2026. Markets faced their worst day since October on June 5, 2026, as Nvidia dropped 6.2%, Broadcom fell 7.9%, and Micron Technology slid 13.3% when traders lost hope for near-term Fed rate cuts. This robust job growth may delay Federal Reserve rate cuts, contributing to continued volatility and uncertainty in financial markets. Sustained high mortgage rates, driven by elevated Treasury issuance, could suppress housing demand and affordability, while persistent fiscal deficits and uncertainty about future policy further increase risks for investors and the broader U.S. economy. Next, let's turn to global sports and the 2026 FIFA World Cup. Fortune reports that fans are calling the 2026 FIFA World Cup the most expensive ever, with many priced out of attending games due to extreme ticket costs. This year's tournament, hosted across the United States, Canada, and Mexico, features expanded participation and brand new stadium venues, but ticket prices have surged well beyond previous tournaments, drawing criticism from fans and commentators. Travel and accommodation expenses in North America are also considerably higher than in other host countries, and Business Insider notes that some seasoned fans, who have attended multiple prior World Cups, simply can't afford to attend this year. Fans are spending thousands of dollars on tickets alone, and four-time World Cup attendee Michael McCready openly worries that rising prices will prevent many from accessing matches. These high prices could lead to lower attendance from international fans, diminishing global cultural exchange, and while local and regional fans may fill some seats, overall diversity in the stands may decrease noticeably. Looking ahead, FIFA reputation could suffer as the event becomes perceived as accessible only to the wealthy, with mounting pressure from fans and sponsors to improve accessibility in future tournaments. Now, let's move to the tech sector and a major strategic partnership involving Google and SpaceX. TechCrunch broke the news that Google will pay SpaceX $920 million per month for compute services, as the two companies formalize this massive deal just 1 week ahead of SpaceX's historic IPO. On June 5, 2026, Google announced this agreement, one of the largest enterprise compute contracts ever seen in the tech sector, at a pivotal moment as SpaceX prepares to open up to public investors. SpaceX has been aggressively expanding its Starlink and data infrastructure services to support massive compute workloads, and Google, under CEO Sundar Pichai, is the primary buyer in the deal, while SpaceX CEO Elon Musk steers the company toward its anticipated public offering. With Google spending $920 per month, this partnership positions SpaceX for enhanced investor confidence and IPO price momentum due to guaranteed recurring revenue. Google's access to SpaceX's compute platform could disrupt the cloud services market and increase the competitive pressure on industry leaders like Amazon Web Services and Microsoft Azure. This collaboration could accelerate deployment of Starlink-related compute services and spark new product launches, while also reshaping enterprise cloud procurement and influencing standards for space-based infrastructure in the medium term. Now, onto the markets. International markets moved sharply lower, with Taiwan's EWT plunging over 7% as the day's steepest drop, and Hong Kong's EWH sliding more than 3%. In the region, Japan's EWJ also fell over 3%, while Indonesia's IDX declined by more than 5%, and Germany's EWG closed down about 2%. EWN in the Netherlands dropped nearly 4%, making it the top loser among European ETFs. Commodities were broadly weaker. Silver's SLV sank more than 8%, uranium's URA fell nearly 10%, and platinum's PPLT tumbled almost 6%. Gold's GLD lost 3.6%, while copper's CPR dropped over 4%, with LIT for lithium sliding by almost 6% and UNG for natural gas retreating 3.7%. All top gainers were absent in this group. The S&P 500 finished down just under 3%, with stocks for semiconductors off more than 10% as the day's biggest sector loser. Finance and real estate sectors edged higher, with XLRE up about 0.7%, while healthcare's Roman 45 gained 0.6%. Among stocks, Springview Holdings SPHL soared 103% to lead gainers, while Nuwellis New sank 65% as the steepest decliner. That's it for today. You can find more news and details on our website. Goodbye.